Hey, you! Ever wonder who actually controls the US dollar? Is it the president? Congress? A secret group of billionaires? Stay to the end to uncover who really runs the money machine. You're about to find out in this three-part series where we break down the truth about the Federal Reserve, who owns it, how money is actually created, and how interest rates secretly control everything from your rent to the price of Bitcoin. In Part 1, we reveal who built the Fed, who owns it, and yes, we'll even touch on the Titanic conspiracy you've probably never heard of.
This is the digital revolution. No retreat, we are the movement. Building empires that forever last. We don't fold, we rise, we blast.
What is the Federal Reserve? Let's rewind to the early 1900s. Banks were failing. People were panicking. Nobody trusted the money system. So in 1913, Congress created a central bank, the Federal Reserve, to stabilize things. You'll hear it called the Fed. But this isn't one building. It's a system with powerful influence over the US economy. And here's the weird part. It's not fully public, not fully private. It's a mix and intentionally confusing. Who owns the Fed? Here's the part that trips people up. Who actually owns it? The answer is complicated on purpose. When people hear the Fed, they often imagine a single building or a small group of people pulling the strings behind the economy. But in reality, it's an entire network, a carefully structured system built to balance public authority with private banking interests, and centralized policymaking with regional economic representation. Created by Congress in 1913, the Federal Reserve System was established by the Federal Reserve Act of 1913 after a series of financial panics made it clear that the U.S. needed a central banking structure to stabilize the economy and manage the money supply. To help you better understand, let's visualize the Federal Reserve System like a cake with 3 layers. The system has 3 core parts. Think of it like building a solid cake base that holds up all the other layers. Layer 1. Thousands of member banks. These are everyday commercial banks, like JP Chase, Wells Fargo, Bank of America. Some are members of the Federal Reserve System and must follow its rules. They interact directly with the public and rely on the Fed for things like check clearing, emergency lending, and reserve accounts. Layer 2. 12 regional Federal Reserve banks, located in major cities like New York, San Francisco, Chicago, Dallas, etc. These banks carry out Fed policies in their regions, collect economic data, supervise local banks, and provide financial services to the government. Layer 3. The Board of Governors, Washington, D.C. 7 members, nominated by the President and confirmed by the Senate, serve 14-year terms to keep them independent from short-term political pressure. They make key decisions about interest rates, bank regulations, and overall monetary policy. Think of them as the head chefs designing the recipe for the whole country. This board is public, part of the U.S. government, sits at the top, with ultimate decision-making power. This is the control layer. It governs the entire system and ensures independence from day-to-day politics or private interests. So, the power over the Fed is held by a publicly appointed board, even though private banks own shares in the system. So, is the Fed public or private? It's neither fully public nor fully private. It's a hybrid system. The key point here: the Fed is created by Congress, operates independently, owned by banks, run by government-appointed leaders. Why? So politicians can't print money or lower interest rates just to win elections. Confused yet? Let me summarize it in plain words to help you better understand. Private banks own shares in regional Federal Reserve banks. These shares don't give control, just a fixed dividend. The real power lies with government-appointed leaders at the Board of Governors. So, it's not owned like a business. It's a weird blended system designed to be stable and hard to manipulate. Now here's where it gets really strange. If you like conspiracy theories, here's a wild one. In 1912, the Titanic, the largest and most luxurious ship ever built, sank on its maiden voyage. On board were some of the richest and most influential men of the time: John Jacob Astor, Benjamin Guggenheim, Isidor Straus. All 3 were reported opponents of the creation of a central bank in America, what would become the Federal Reserve. But guess who wasn't on the Titanic? J.P. Morgan, one of the most powerful bankers in history. and a strong supporter of the Federal Reserve. He owned the Titanic through his company International Mercantile Marine. And get this, he had a first-class suite reserved but canceled at the last minute. Why? Officially, he said he was ill or had urgent business. But conspiracy theorists think otherwise. Just 1 year later, in 1913, the Federal Reserve Act was signed into law. Coincidence or calculated move? Historians mostly call it a myth, but the timing, the players, and the aftermath have made this one of the most talked about financial conspiracies in history. And when power, money, and mystery mix, people notice. But let's pull back from the mystery for a second and talk about something very real. If the Federal Reserve System is so powerful and it quietly runs the money game, who's actually profiting from it? So, who gets the profits? After paying those 6% dividends to banks, the Fed returns its profits to the U.S. Treasury. In 2022 alone, that was over $76 billion back to taxpayers. Not bad for a bank with a monopoly on money, huh? So now you understand how this mysterious system was built, who technically owns it, and why it's part public, part private. But here's the real question. Who actually controls the money flowing through our economy, and how is that money even created? Most people think the government prints it. But what if I told you the truth is stranger than that? Click to watch part 2 of this series, where we uncover how money is created out of thin air, and why most of it doesn't even exist in physical form. And don't miss part 3, where we expose how interest rates are used as an invisible lever controlling inflation, recessions, and even your ability to build wealth. Knowledge is power. Trust me, by the end of this series, you'll never look at money the same again. Stay tuned. We've got more wisdom to share. Hit that like and subscribe button so you don't miss the full breakdown only here with Beanbit.